It's through learning and failing that I've gained more confidence than ever being successful. Because if you fail, you know why you failed.
Empathy, it's quite an intangible trait. How do you turn that into something tangible?
Well, the way that I learned a lot of empathy was deciding to go own and operate a Chick-fil-A on the front lines with my brother. And there is nothing that humbles you faster than going from the strategy you just wrote and having to execute that with a bunch of 21-year-olds.
Infrastructure for AI is like the main lesson that you think that we need to learn, how, infrastructure empowers innovation.
I think that what we need to understand is that humans still need to be like the center, and we need to be AI powered.
I guess this is where that kind of conviction and confidence that you talk about at the very highest level is absolutely paramount, right?
71% of CEOs have admitted to feeling like imposters at some point in their career. And if that's on the CEO level, imagine the rest of us, right?
Today on Return on Insight, we are joined with Tracey Abbott from Leadership Current. Tracey, it would be great to understand your story and your journey to where you find yourself today, coaching the most powerful CEOs in private equity owned portfolio companies.
Well, I would say the first 50 years of my life were spent having to have all the answers. And I would argue maybe even being right. And the second half of my life, I really want to be about the questions. And that has really switched how I feel about being like the main character to the supporting character. And I call my business Leadership Current because I spend a lot of time in the ocean at deep depth. And I'm always in that flow of current. And I think when we are in that, great ideas come to me at that level. And I don't have to force them, and I don't have to try to find them. They find me. And so when I coach CEOs, there's so much that they have already inside them. And what they really need is a mirror and somebody to hold that space while they question things. So that's what I'm doing today. My career before that, the resume career was through consumer goods and retail, and took some big risks from small businesses to big businesses. But I think that's what I have done is different from who I am. And the best leaders can figure out how to combine both of those things. So that's what I try to get CEOs to do.
What are the biggest problems that you're solving?
Leaders today, they are lonely at the top, right? You can't really tell your teams everything that's going on. You can't really tell the investors everything that's going on. And so I think that's what I notice the most. So in terms of being a coach and an advisor, that's the position that really helps them, I think, feel like somebody's in their corner and also challenge them.
Very interesting, because I think no one would really consider these high profile operators to have a feeling like loneliness. They would associate that position with pressure, as being on the hook to deliver results. But that loneliness is, I guess to me at least, it humanizes them. Is that kind of human element, EQ, empathy? Is that something that you're having to work with your clients on and kind of give them guidance in that light?
Yeah, when I think about how I coach, the first thing that we do is really do an assessment. So a 360, interviews, the Hogan assessment, and really get a good sense of where their self-belief is today and how it ties to their values. And the people that I coach are definitely open and willing to go on that journey. I wouldn't be able to coach someone who wasn't in growth mode, I would say. So it is really important. And I think empathy is somewhat innate, but I think it can be built as well. And the more that they're allowed to be human, I think they can allow others to be as well.
That kind of pre-engagement assessment, it somewhat mirrors what operating partners do with the pre-deal
Mhm.
assessment, right? Where they kind of build a picture of where the business is strong. But I think kind of the thing I really wanted to understand more about was the cultivation or the development of empathy. How would you go about doing that?
Well, the way that I learned a lot of empathy was going from consulting, rocket ship career into the boardroom, and then deciding to go own and operate a Chick-fil-A on the front lines with my brother. And there is nothing that humbles you faster than going from the strategy you just wrote and having to execute that with a bunch of 21-year-olds and train up teams like that. And so for me, empathy is truly walking in someone else's shoes, because you can think you know, but you don't know until you've done that.
So lived experiences are really kind of where you see that blossoming from. Um, do you think prior to having that lived experience, they kind of need to be in a mode where they're active and open to starting to really consider other people's perspectives, or is it something that you think the lived experience itself would almost manufacture?
Well, one thing that I think is really important and that I help CEOs do is really cultivate that inner data that they have, which
Uh-huh.
is intuition. And when you think about intuition, I think it can be built, and it's by experience times risk. And risk is that multiplier that makes that lived experience able to transform. And so I think it's both from the experience that people get,
Uh-huh.
but then the risk that we take, and how far out, every risk can teach us to move that threshold out a little bit more. And so I think that's how you can really cultivate it. That intuition and that internal data is then, I think, what helps decision makers make them faster and better.
You brought up data, which, again, I kind of look at intuition as being your subconscious data processing and evaluation. Now, the thing is, these are, empathy. It's quite an intangible trait. How do you turn that into something tangible so that, in this modern commercial world where data is king and everything is supposed to be measurable? How do you turn empathy into something that is tangible and measurable?
Well, I think it's by pulling ourselves out of the situation to almost like the ballroom, the top of the floor, so you can see the dance going on, but you can become more objective, because that's for me what data is. If it's external data, it's objective. And so when leaders are in situations, they tend to be in them and really feel them, right? They're emotional a lot of times, if they're founders in particular, or they have a lot of pressure on them. And so the ability to pull up and to see the business from that perspective and to see all of the players in the dance, I think helps leaders be able to find that empathy in that objectivity.
How does that contrast with so working with founder CEOs versus investor installed CEOs? What are the differences there when you're working with people of that background?
Well, I mean, founders, and I've been one myself, we have to be really confident, because you have an idea and then you've got to go really sell it to the world.
Mm.
And then you have to really bring people along with you on your idea. And hopefully your idea is something that hasn't been done before. So it is very much based in intuition, and you're looking you're looking around corners that maybe not everybody has seen before. So it takes so much influence skill to bring people along into your team. And then it's about, how do you scale from like 0 to 3 million was the hardest that I ever did. And then 3 to 10 is another really big step. And then at that point, you can start to put, infrastructure, and you can start to put tech in place. But when you're sort of flying by the seat of your pants early on, it takes a different kind of person. So I understand why private equity often will say that they don't necessarily buy founder-led businesses. And I think it's because of the emotion that a founder has had to have to get it to a point of success.
So almost like the skill set that got them to where they are is not the skill set that will get them to where the investors want them to be.
I think it's about it's called a professional CEO versus a founder. And
Yes.
I have seen the transition a few times, right, where a great founder can become that more professionalized and more systematic leader. But typically, when you're inserting a professional CEO into a situation, you're going to do that like after ERP. You're going to do that at 15 million, 20 million, and then it's different. It's not that same hockey stick. Are we going to survive or not? It's about optimizing and growing from there. So I think they're different personality traits.
So almost emotion versus pragmatism.
Well, founders are emotional because they're emotionally tied to the idea,
Hmm.
but they have to be more pragmatic than anyone, because they're scotch taping this thing together and trying to fly it on no money. And it's probably, family and friends in that round to start with. So now they've got even more pressure in some way on them. I think it's passion, maybe, is the better word than maybe emotion.
Mhm.
And the passionate founder is someone who's also harder to control from a board perspective or from a private equity perspective.
Your background, like a lot of operating partners who are present at the conference, it's varied and it's broad. Uh, What are the things that you take from each of these stints as working in consumer, in consulting, entrepreneurialism also, and then also as an operating partner? Is there something from each of those phases of your career that you use in your work today?
The biggest thing I think is stakeholder management. So if you think about all the consumer businesses I've been in, from Adidas to Foot Locker to Chick-fil-A to PepsiCo, your stakeholders are your customers first and foremost, and you see them every day. You can see, you can touch, you can see your mistakes as well, particularly if you're running a high-speed business. And then I think it shifts over time. So your stakeholders, when you're an operating partner, your stakeholders are the deal team. It's the board. You might sit on it as well. It's your management team, but it's not. It's further from true consumers that you're touching in the market, right? And so it's a bit more of a B2B stakeholder management approach than maybe B2C. I really enjoy both, but they are different in terms of how to manage them.
So, what did you enjoy the most about each, and what would you say are the differences that, firstly, they mandate, and how that impacts how you work with management teams in those spaces?
So I think back to where I think I developed intuition, I think a lot of times it also comes from creativity.
Hmm.
And when you work for big brands and you're innovating all the time, I mean, you innovate or die, right? From packaging to formula to whatever it is, that creativity keeps lightness and a youth in a business, right? And then I think as you come into private equity, you should still be curious and playful, but it is less so because it is a far more risk averse environment. And I think consumer and big companies like those, I think they are more risk taking just by the nature of having to drive innovation.
The risk aversion that you see in PE owned businesses, which I'm guessing you're saying is inherited by the investors themselves, how much do you think that hampers the ability of the management team to deliver the value that they're mandated to deliver?
Well, I think it's a question of how to see risk. And I'm talking big private equity here, right? Like
Yeah.
where it's 6 to 10% growth a year would be great. I'm not talking early stage where it's huge, right? I think that risk, to get 6 to 10%, you manage your costs really well, as we've talked about, and you invest in that top line, but it's probably equal parts, right? Because EBITDA at the end of the day is the number. And then when I think about other businesses, they use risk as a top line driver. And it's not something to mitigate, but it's something to compound. And I think it's the fundamental difference of how you view risk and what then that can do. Now, higher risk can come with higher returns. It can also come with failure. But that is the iterative process that I think industry needs to innovate.
How do you essentially help your clients tell their investors, or convince that their investors, that the risk they need to take is necessary to deliver the returns and the growth that they need to mandate?
I think it's about learning the language of private equity, and everything is a balance. So I look at risk as a portfolio of risk as well. And so, when you look at like the cost saving measures, you can certainly talk those and it gives you some credibility. And then picking your top 3 priorities and not 75, because CEOs are really smart, they have 75, but picking their top 3 and really understanding, is this going to be inorganic growth? Is it going to be through M&A?
Yeah.
And if so, what money do you need to do that? Private equity is going to say save it elsewhere in order to drive that money into M&A. But then the rest of those growth levers are certainly around things like pricing or cost expansion, et cetera. And so I think taking those risks that are in private equity language in a value creation plan that they can understand is a lot more feasible and translatable.
So you mentioned levers, and again, people are a huge lever in value creation.
They're the lever.
Well, yes, exactly. And the fact that you coach the people, um, how do you help your clients create that internal capability within their human resource to align with, the like the value creation plan?
I think everything that is a talent strategy has to tie back to the value creation plan. And then you have to see, okay, so where is your team today? So it's how I coach, right? What is your base case? And then what is needed in your investment thesis 3, 5 years out? What is that upside case in the true VCP? But then looking at leadership development in the same way. So what is the leadership VCP that's going to take you from the base case to the upside case? And I think first understanding what team you have, and then understanding where are holes in the growth that we need to go to. An example is adding a lot of digital capability, adding people with AI, adding things that are, we'll see how it all plays, but adding a lot more technology into that. Also, you see more and more talent partners coming up in private equity. And I think, private equity understands that in these longer hold periods with debt where it is, thankfully it's coming down now, but it is an operating game now, not just an inorganic game.
And you feel that that has taken precedence over, for example, some of the more traditional methods in the PE playbook, like reducing the cost base and financial engineering.
I think financial engineering depends on where the asset is, right? So I've also sat in special situations because some of those consumer assets we had, when you go through COVID, they become, financial engineering assets. And I've seen some amazing CEOs be able to pull that off. But the growth CEO is not the turnaround CEO. They're wired differently. They have different financial skills as well. And so, I think looking at where it is in the life cycle, looking at how are they doing, according to plan, and then understanding the risk tolerance that private equity has in order to get something back up to par or get something to a 4x exit. That looks pretty different.
We've spoken a lot about the range of professional experience that you've had, but you've also had professional experience that has spanned multiple different regions. You've experienced cultures professionally from, the West Coast all the way to the Far East. Is there one that you feel that is perhaps underappreciated in terms of the value of their distinct way of operating?
It's the story that I love to tell the most, which is going in 2005, I was in London and an all call went out for anyone willing to go to the Dubai office. Now in America, we were not talking about Dubai. This is 2005, right? So it's not something that people really knew. Dubai were pearl divers 70, 80 years ago. This is a desert, right? With nothing in it. And I think that really helped them have a wild vision of what to build because they had nothing to lose. And watching and being part of that and seeing that growth from on the ground. I mean, I don't even recognize Dubai today. I thought we were in the boom back then. And 20 years later, working for a sovereign wealth fund, coming back and seeing it, I'm lost. I don't even know where it is. So I think that just relentless curiosity and ability to sort of say, what's the worst thing that can happen and build like that, I think is the most exciting growth story that I've ever been a part of. So I love emerging markets because they get to sort of skip in some way, having to retrofit everything in a culture back to something, and they can just move fast and dream big.
So it's greenfield, and as a consequence of that, they don't have the same constraints that perhaps more risk averse markets that have a legacy story to consider.
Yeah, it's like, and it's the speed of technology as well, right? So I worked in South Africa, and South Africa, like Africa, didn't go from a slow adoption of technology or even of phones, right? It went from like no phones to like phones, and it went from no film or no cameras, because I worked for Kodak back in the day, to digital cameras. And so they skip really quickly in emerging markets to going from nothing to the end product. And I think it is I think we should take some lessons from that in AI and how some of our more established markets are comparing to the emerging world and how they're adopting technology. The Middle East is right now they're building the data centers in the middle of the desert to support everything that we need in AI. So they're very, very bullish on it.
So is that infrastructure for AI like the main lesson that you think that we need to learn, how infrastructure empowers innovation?
I think that what we need to understand is that humans still need to be like the center, and we need to be AI powered. So I think there's a lot of fear around what AI takes from humans. And I think that can be true if we don't also upgrade our internal operating system. And again, I think that's through building intuition and pattern recognition.
Yeah.
Because how do you even know when you look at an answer from AI if it's right? If you're just outsourcing judgment to a tool that doesn't have it, then you're not asking questions to to a tool that you're not even sure you can trust.
Personally, that's one of my fears as well, is how AI has there's the risk of it distributing groupthink, right? Because the model makes the decisions off a centralized database, and people take that as gospel, hallucinations, etc. How do we really decipher them if we're just so dependent on what AI is telling us?
So I think we have to start with, what do we think? Like, what do you think? And then you can go to AI and you can test it and you can iterate on it. And if they're really similar, then I feel comfortable that I can move fast. But where it's different, that's where the learning zone is for me. And that, I think, is the power, is that we still have to remain in the driver's seat. AI is a tool. It is not an oracle. And I think that's where we might make the mistake.
So almost AI for validation as opposed to origination.
Mm-hmm.
And at that point where people need to lean into their own beliefs and persuasions, I guess this is where that kind of conviction and confidence that you talk about at the very highest level is absolutely paramount, right?
Mm-hmm.
Because you need to be able to challenge the model. So for people who aren't accomplished CEOs of PE portcos, how do they cultivate that confidence and that conviction to go against an authority, whether it's AI or any other type of source of information?
I think it comes back to self-confidence. And I think self-confidence gets eroded when we feel like imposters. And 71% of CEOs have admitted to feeling like imposters at some point in their career. And if that's on the CEO level, imagine the rest of us, right? And I think we feel like imposters because we don't trust ourselves. So it comes back to self-knowledge, self-trust. How do you do that? Well, it's actually looking at how you make decisions and seeing where you were right or where you're wrong. And again, moving that threshold out where you learn, because it's through learning and failing that I've gained more confidence than ever being successful. Because if you fail, you know why you failed, and then you can correct it.
That's a really interesting and I think powerful way to move on to the next phase of this conversation, where we do something called This or That, where we wrap up with a few short fire questions.
Okay.
So the first question that I wanted to ask you was growth or stability, and you can only choose the one with a no explanation.
Growth.
Reduce cost or drive revenue?
Drive revenue.
Profit or purpose?
Purpose.
Startup hustle or corporate scale?
Startup hustle.
Data or gut?
Gut.
Work from home or back to office?
Hybrid.
Strategy or execution?
Execution.
Debt or equity?
Equity.
Thank you so much, Tracey. It's been a pleasure.
Nice to see you.